Hello, how are you? Today our discussion is about cost behavior, and this one is part of Module 3. So let's start. So what will be the topic here? So we have 4 topics. The first one is we have the fixed cost, its theory and its computation, and the variable cost, the semi-variable or semi-fixed cost, and then the step fixed cost. So let's start. So when we say cost behavior, it refers to the way how a cost changes when the activity or output increases or decreases. For example, the cost involved in manufacturing 10,000 umbrellas is more than the cost incurred in making 2,000 umbrellas. In other words, the total cost should increase when the output also increases. Let's start the discussion between the fixed cost. So this is Mayumi Rich, a cost accountant, and is helping Ching Castor Jr. in preparing cost sheet and give some example to make her understand various costs. So this is Ching Castor, and you're hired accounting assistant of Mayumi. Hi Ching, can you tell me how many pants did we manufacture this month and in the previous months? Sure, Mam Rich, we produced 8,000 pants this month. During the month of April, we created only 2,000 pants. In the month of August, we managed to produce only 1,000 pants. Did you notice that the rent paid by us for the factory building is 30,000 every month, irrespective of the volume? Whether we manufacture pants or not, our rent is fixed at 30,000 every month. Is it not a fixed cost, Ching? Yes, Mam Rich. Now I got it. Fixed costs are costs that are not affected in totality by the level of activity and remain the same regardless of how much or how little work is done in a period. Look at the diagram below. This reflects the fixed cost in total. It is important to note that fixed costs need not remain the same over a period of time. If the cost is fixed for an item, the cost per unit has to come down or decrease when the volume or activity increases. Fixed cost per unit example. So assume that the cost of manufacturing a pant is 3,500. If 5 pants are manufactured, then the fixed cost per unit will be 3,500 divided by 5 is equals to 700 per pant. Similarly, if 50 pants are manufactured, then the fixed cost per unit will be 3,500 divided by 50. So we have 70 pesos per pant. So conclusion, as the level of activity increases, fixed costs remain the same in total, but the per unit cost of the activity falls. Ching, do you heard the word variable cost? Yes, Mam Rich, but can you please explain this to me clearly with examples? Sure, Ching. Variable costs are quite opposite to fixed costs. Variable costs are the costs that change in direct proportion to the level of activity. Direct material is a classic example of variable cost. If additional quantities of a product is produced, it needs the same quantity of raw materials which cost the same. Look at the diagram below. This reflects the variable cost in total. From the diagram in the previous slide, you must have analyzed that the variable cost in total change at the same rate as the level of activity. However, within a reasonable range of activity, it is found that variable cost per unit of output remains pretty much the same. Conclusion, as the activity level increases, variable cost also increases in direct proportion. So we have 5 distinctions between fixed and variable costs that can be used to analyze profitability, in product costing, in decision-making process, whether to increase or decrease the activity level, to estimate the future costs, and to assess the performance. Ching, do you understand the term semi-variable costs? Yes, Mam Rich, to some extent. I think it has both fixed and variable elements. Am I right? Absolutely. When you say semi-variable costs, they are those costs that have fixed and variable elements. Ma'am, can we consider telephone charges as an example of semi-variable cost? Exactly. Telephone charges every month have 2 components. The rent charge is a fixed cost and the charges which we pay for the calls made are variable cost. This is the semi-variable cost example. Under semi-variable cost, the cost per unit falls as the level of activity increases. Ching, listen to the example and then answer my question. Sure, Ma'am Rich, go ahead. For producing 200 shirts, you need 1 supervisor. For manufacturing additional 200 shirts, you need another supervisor. Am I right? Of course, after a certain range, your fixed cost increases. Yes, the important feature about these costs is that they remain fixed up to a certain level of activity and they go up a step when the activity level rises. Step fixed costs are also called as step costs. They remain constant for a range of activity and then change and are in constant change for another range. The cost behavior analysis is used for a variety of reasons. They are: the future cost is estimated based on the estimated volume of activity. The actual costs are compared with the expected costs for the actual level of activity achieved. Before we end, we'll give you an example on how we're going to compute the variable and the fixed costs. So we have product A and product B. So we have direct material, direct labor, and the variable overhead costs. For the direct materials, we have 14 pesos per unit. And for the direct labor per unit is 1.5. And cost per hour is 10 pesos. And for the variable overhead cost, we have 2 pesos per hour. For product B, we have 12 pesos for the direct material per unit. For the direct labor, we have 2.5 hours per unit. And then for the direct labor, we have 10 pesos per hour. And then for the variable overhead, we have 2 pesos per hour. Our expected fixed cost is 220,000 pesos. Then we have 5,000 units of product A and 2,000 units of product B will be produced. What we need is to calculate the total expected cost. So here's the computation. So this is the result of the computation, but let me discuss you how we arrive with this amount. First is we need to compute the product A for the direct materials. So we have 7,000. So we need to multiply the 5,000 units times the 14 pesos per unit. So we have 70,000. Direct labor, we have 5,000 units multiplied by 1.5 per hour and multiplied by 10 units. So we have 75,000. For the variable cost, we have 5,000 units multiplied by 1.5 times 2 pesos. So we have 15,000. So all in all, product A had 160,000 variable costs. What about product B? So given here is 2,000 units. So we're going to produce the direct materials. So we have 2,000 multiplied by 12. So we have 24,000. For the direct labor, we have 2,000 times 2.5 times 10. So we have 50,000. For the variable overhead, we have 2,000 units times 2.5 times 2. So we have 10,000. So all in all, product B had total variable cost of 84,000. So the total variable cost is 244,000. Add the total fixed cost, which is already given. So we have 220,000. So all in all, we have the total cost of 464,000. So this total cost is also called as the product cost and also called as total manufacturing cost. So this is the end of our cost behavior module 3, and I'm just hoping you understand this topic. Again, this is Thinktank like this, and I'm just hoping you will visit our other module with regards to cost management, cost accounting, and managerial accounting. Thank you and bye-bye.